Hi traders, welcome to what could be the most important hour you spend on your financial future. I am the founder of EducationOne, and in this comprehensive step-by-step beginner guide, we are going to master the absolute fundamentals of forex trading, turning you from a complete beginner into an educated, strategic market participant. We'll cover everything from pips and lot sizes to technical analysis, risk management, and building a profitable trading plan. By the end of this video, you will have a complete roadmap for starting your journey. But first, a crucial note: forex trading is risky. You should trade with money you can afford to lose. Nothing in this video is financial advice, and the goal is education. Trading success requires discipline, patience, and solid plan. Now, let's get started. What is forex? So, what exactly is forex? Forex is short for foreign exchange. In its simplest form, it is the global marketplace where national currencies are traded. When you travel and you swap your dollars for euros, you've participated in the forex market. But for us, the traders, it's much bigger. It is the largest, most liquid financial market in the world, trading over 7 trillion every single day. Crucially, it is a decentralized market, meaning it doesn't operate from a single physical exchange like the stock market. It is over-the-counter, that is OTC market, run by a global network of banks. And the best part for us, it runs 24 hours a day, 5 days a week, from Monday morning in Sydney, Australia, until Friday evening in New York, giving you the flexibility to trade on your own schedule. Why trade the forex market? That's the question to consider. And I know you have an answer why you're here, because that's the reason for this video. Why do millions of people choose forex over stocks or other markets? We have Alaba market, we have Sydney market. There are 3 main reasons, right? 1, high liquidity. Because so much money is flowing through this market, the liquidity is incredible. This means that you can almost buy or sell major currencies instantly, usually at the price you want, with very low transaction costs. Number 2, accessibility and low barrier to entry. You don't need a massive bankroll to start. You can open a micro account with a small deposit and start trading micro lots, which we'll cover in a moment. Thanks to the modern brokers, the market is available right on your phone or laptop. You don't need expensive gadgets to trade this market. Number 3, profit in both directions. Unlike simply investing in stocks where you typically only profit when the price goes up, forex allows you to go long, buy, and profit from a rising price, or go short, sell, and profit from a falling price. This gives you opportunity, regardless of the global economy's direction, to profit from the market. Next, we'll talk about core terminologies and methods, right? So, what are currency pairs? To trade forex, you must understand that currencies are always traded in pairs. You are simultaneously buying one currency and selling another. The quote always looks like this: Euro USD. The first currency, Euro, is the base currency. The second currency, USD, is the quote or counter currency. The price you see, let's say 1.100, is how much of the quote currency it takes to buy 1 unit of the base currency. So 1 euro is equal to 1.100 USD. If you think the euro is going to get stronger, you buy the pair. If you think the euro is going to get weaker, you sell the pair. So basically, you are going to be buying or selling in pairs. You don't have to use one currency to buy another singularly. So both of them, as you are buying one, you are selling the other. And as soon as you're selling one, you are already buying the other. Note, you buy the pair or sell the pair. Pairs are grouped into majors, that is Euro USD, USD JPY, GBP USD, which include the USD and are the most traded. Minors or crosses. These are like Euro USD, AUD JPY, which do not include the USD. And then the exotic pairs, which are a pair of the major currency with a currency from a developing nation, e.g. USD TRY or USD NGN. Next is pips, pipettes, and spread. How do we measure profit or loss with a concept called P, which stands for price interest point? For most pairs, a pip is the fourth decimal place. If the Euro USD moves from 1.00 to 1.001, that is a 1 pip move, right? A pipette is the fifth decimal place. Some currencies are put in 5 decimal places. So the fifth decimal place is the pipette, representing a fraction of a pip, often used for more precise pricing. The spread is the transaction cost. It is the difference between the bid price and the ask price. That is what the buyer is willing to buy and then what the seller is willing to accept. You often open a trade, you are immediately in the negative by the amount of the spread. Brokers make their own money from this spread, and commissions or whatever they decide to use as a means of their income. So next is lot sizes. What are lot sizes? When you place a trade, you are trading in units, measured in lot sizes. One, we have standard lot, which is 10,000 units. 1 pip move is worth approximately $10. Then we have the mini lot, which is 10,000 units. A 1 pip move is worth approximately $1. Then we have the micro lot, which is 1,000 units. A 1 pip move on the micro unit is equal to approximately $0.10. For beginners, micro lots are essential. They allow you to test your strategy and manage your risk with every small financial exposure. Start small, stay humble. Let's talk about leverage and margin. What are leverage in Forex, or what are margin in Forex? This is where Forex gets excited and dangerous at the same time. Leverage is what allows you to control a large amount of currency with a small amount of capital. A leverage ratio of 50:1 means that for every $1 in your trading account, you can control a 50,000 more of the same account of currency in the market. If you want to open a standard lot, let's say 100 units with 50:1 leverage, you only need to put up to 2,000. You only need to put up to 2,000 of your own capital. That is $2,000 of your margin. Here is a warning. Leverage amplifies your profit, but it also amplifies your losses at the exact same rate. If your trade moves against you, you can lose your entire margin deposit quickly. This is why strict management, which we'll cover later, is absolutely non-negotiable. Now let's move to broker, platform, and then market analysis. You understand the language of the market now? How do you actually assess it? You need Forex broker. The broker is the intermediary that executes your trade orders. Choosing the right one is one of the most important decisions you would make. The absolute number one factor is regulation. Only use a broker regulated by a reputable financial authority, like the FCA in the UK, ISIC in the Australia. The verifiable/CF brokers in your country and use them. It ensures your funds are segregated. Other factors to consider adheres to strict operational standard. And if you are from other countries, you can look for the verifiable brokers in your country and use them. Other factors to consider: spreads and commissions of those brokers are the things to also consider. Lower is better. Execution speed, how fast they process your trades, and then the quality of their customer care support is another thing to also consider. So these three factors will help you in getting a better broker. Now let's go to trading platforms.
So the next is platforms. We have MetaTrader 4 and then the TradingView. MetaTrader 4 or its successor MetaTrader 5. So when you have been able to select a good broker, your broker will offer a platform. This is your gateway to the market. The industry standards are the MetaTrader 4, which is popularly known as MT4, and its successor MetaTrader 5, that is the MT5. MT4 is famous for its stability, right? Because it's the stable version. And then the MT5 has advanced features. The MT4 has is better for running expert advisors, that is the EAs. If you want to create trading bots or code trading bots, the MT4 is more suitable. But MT5 has more features and more time frames, and you can also you have access to stock and commodity market more in MT5. Your goal is just to learn how to use one well, and that will be okay. So here is MT5 installed on my PC, and I just want to run through the brief introduction of the interface so you know what is going on here. So when you turn it on, when you open the app for the first time, you're going to have something like this black background, and then this black background is your chart window, and then this is market watch. This market watch is a property box that contains the list of all the pairs. We talked about pairs earlier. So you have like AUD CAD, AUD CHF, AUD DKK, AUD HDK, Euro JPY, USD JPY, USD CHF, GBP USD, and so on. So this market watch contains the list of the pairs that are tradable on this platform. And then this is the trading window. So you can adjust this trading window to suit your demand. And right click, go to properties. Then you can change the background, do all your adjustments here in this property dialog box. So you can like try here, come here to the background, right? Click on background. Then you can make changes to the background, make adjustment depending on what you want, right? So, and then you can also adjust your chart color. I want to give it different color, so beer candle, let me give it something like gray, right? So when you click on OK, is how exactly your chart will look like. And then you have opportunity to also save these properties, so you can like save this as a template so that you don't need to adjust every other time you open the chart. So look, for instance, when you open AED card, you can easily utilize the last preset template you have set. So I can come here and then save this setting as a template. So I just click on template, save template, say template nice background, right? Nice PG. Click on OK. So when I go here, I can easily utilize that template. So I go to template and then you see template nice PG. As soon as I apply it, it just affects the whole trading environment. So the same settings I've had for the other side will be replicated here. Okay. Then there are grid lines here. I don't want to have grid lines here. Just right click on grid, and the grid lines are no longer here. All right. Then here we have a strategy tester. Strategy tester allows you to test out your strategy. For instance, let's say you have a trading bot. I have one trading bot here. This Algo trader. I coded it, but that's not a major concern here. But if I want to test this bot, that is this EA that are coded, I'll use strategy tester. So strategy tester is basically used to test your strategy, right? So then you click here, you click on start, then you can start which pair do you want to test. You can select them in this box that's just closed out, and then you can click here and begin to play it out. You can see. So based on this my trade, I'm now trying to test based on this my trading algorithm that I developed a code for. I'm trying to test whether it is profitable or not. So I have coded it in such a way that if it reaches a certain point, it should take trades by itself. And I wanted to see when it to take trade. But the goal is not for us to just come here. The goal is that strategy tester is used to test your strategy, test out your trading strategy, so you know exactly whether your strategy is performing well or not. All right, let's stop for now. But based on the way I coded it, when it gets to a certain point and it meets those rules I preset in the code, it will take trade. So it hasn't met any yet. That's why you haven't seen any trade. But this is just a simulation of what it will be in live trading when you begin to use it, right? So let's stop for now and continue, right? So that's that for strategy tester. So here you have all the things you can change. You can just check. You can just run through them. And I told you that there will be a dedicated video where I analyze everything in this trading platform, so that you don't have to worry about it. For now, let's just run through the overview. So we have the title bar, we have the menu bar. These are menus and sub menus that you use to give command to this trading platform. When you click, if you want to open a new chart like new pair, you click on new chart, and then you're able to select one. Click on file, click on new chart, then you can select ADC chef. So you can see it's loading. Let's give it a little bit. Then we have the view, this is where you turn on and off all the bars. Like this market watch, I can turn it off here, click on market watch, and then it's gone. If I want to bring it back, I click on it to get market watch. Okay, I have other bar. I have tools bar. If I want to activate or deactivate any of those tools, I just click it. Even the strategy test, I can hide it. When I click on this, it is gone, and when I click on it again, it shows. All right, so the view menu helps us to activate and deactivate tools bars or text boxes or property bars, right? Okay, that is that for that. Then we have the insert menu. This is where we have to insert indicators. Indicators are just as the name implies, they are pre-written codes or EAs to say that determines the market indicators. Sometimes you want to know the trend of the market. Indicators can help you. Some persons can their trade is based off of certain indicator movements and some kind of other analysis combined together. But our focus is we're not going to use indicators to trade, but you just have to know that they are indicators, and even EAs fall under indicators. Then we have objects. If you want to insert object on your platform like text, Fibonacci, rectangle, you want to draw trend lines, under insert, that is where you get that. So we can draw something like a trend line. Let's see, insert object, trend line. I want to close this, draw from here to here. I think it's black, so is it shining? Okay, you can see the trend line here. So you can say, oh, it's bullish, and if you want to draw it down, you can also draw trend line downwards, and then you'll be like, oh, it's bearish, right? So that is that for the object. We can also insert text, and you can come here, type what you want to type. So let's say bullish, click on OK. You can also change the color, double click on it, edit, properties, come here, change the color to, let's say, blue or dark blue. So you can see it here. Let's change it to white and see. Come here, white. So you can see it's now white. That's that. Then the next one is tools. This is where you place your order. We'll talk about order extensively in another in a dedicated video. And for now, just know that if you want to place your order, you click on tools and then you click on order. Then it takes you to order dialog box. This is where you make your order. And then we have two types of order. We have the market execution, and then we have the pending order, as you can see here. The market execution is trading on the go. Like if you click on if you select market execution, put your volume, your lot size. This volume here represents your lot size, right? We talked about lot size previously. So, and then you can set your stop loss, which we also talked about, or I think if we have not talked about that, we have talked about that, yes. So you set your stop loss, that is the market price at which if you are in a loss, it stops going against you, and then take profit, that is TP, that is the market price at which you're comfortable with the wins, and then you just want the trade to automatically close out. That is that. So we have the market execution and then the pending order. Then under pending order, we have buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit. I basically use the first two, but I will explain the rest. So the buy limit is, let's assume the trade is going in your favor. like is buying down, that is the trade is going bearish, and then you want to like, meaning that the trade is buying. So if it is bearish, sorry, yeah, if it is bullish, we say it is buying, right? If it is selling, we say it is bearish. So when the trade is buying and then you want to say, okay, at a certain limit it should stop buying. Do you understand? So that would be buy limit. And then similarly, if it is selling and you want it to stop at a certain time, you set your sell limit. Then if a trade is buying and then you want it to stop at a certain place, you use buy stop. Similarly, if it is selling and you want it to stop, then you use sell stop. But for now, let's just understand that there is a pending order, there's a market order. Then under pending order, we have that we have buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit. I will explain this with practical taking trades so that you know exactly how it works in another video. Okay, so that is that for under tools. So under tools, that is where you basically carry out your trade when you click on new order. So the new order helps you to create your to enter trades, right? Then we have strategy tester, just like I showed you before. That is where you test out your strategies. Then we have meta post language editor. So if you want to write ease, this is where you click. When you click on this, it will take you to where you can edit your codes, write your codes, and then you can come back and utilize that trade on your MetaTrader 4 as expert advisors rather. Okay, so let's close out from there. For now, just know these basics. Then we have global variables. All of these are related to the coding EAs. And we have task manager. Task manager will show you all the tasks that are open currently. You can see summary, you can see so many stuff, but we don't need it right now. Then we have MQL market. This is a marketplace for the language, that is the coding language for this MT5, which we call MQL. MQL5 has a market, just like we have we have market for most of the languages. So this is where they release their new marketing strategy with community and so on and so forth, right? And then you can read some things about them. Okay, then the next thing is we have option. Let's go to option. The option will help you to set some things on this to adjust your settings. Sometimes you don't want notification. You come here, you can close out all notification. It can be annoying. Sometimes you'll be hearing sound upon sound. So if you don't want notification from events, from the app, from emails, from news, you can turn them off, on and off under this option. For now, I want to turn off all notifications because it can be annoying sometimes. So I'll close this off. Then if you want to download MT5 or MT4 for Android or iOS, you can also follow the links here, but that's not our goal. I already have it. Okay, then we have the window menu. The window menu helps you to tile your charts that are open. So some of the charts that we have open has been tiled here. You can see all of them at once. So if you're working on Euro USD, JP USD, and you open all of them, the tile window helps you to visualize all of them on the chart window. And if you want to go back, you just click on tile again. It has to remove. If it doesn't remove, just expand one and they are gone. or you can come here and click on reset to default. Right, reset to default should take you back to 1. If it doesn't do that, it's not a big problem. Just click on your expand or maximize one of those chat windows. Then we have tile horizontally. You can tile them horizontally. They are now arranged horizontally. You can also change it to cascade, and then you see the way they are arranged. Anyone you want to click, just click on it. The one you work on, just click on it like that. But now let's reset to default. Right, reset to default. So just expand 1, and here we are. Then we have the help menu. The help menu helps you to get extra knowledge about the MT5. You can read up about them, their documentation, how to use it, how to use the MQL language, how to write EAs, all of those stuff. If you want to read about them, if you want to get it for Mac, if you want to get MT5 or MT4 for Mac, for Linux operating system, and all of those stuff. If you want to know about what version you're using, you click on about. So all of those are under help. So this is all for now on MetaTrader 4, MetaTrader 5. The interface is the same for both of them. It's just that MetaTrader 5 is a successor of MetaTrader 4. There's nothing different. If you know different, basically, if you know how to use one, you are good to go. You don't need to know exactly how the two of them work, because basically they are the same. So for MetaTrader 5 or MetaTrader 4, as the case may be on your end, the platform is not really flexible. So what we do as traders is to use TradingView. TradingView is more flexible, right? So TradingView is more flexible, and then the TradingView, for the TradingView, what we do is we do most of our analysis on TradingView, then come to MetaTrader 4 and do most of our trading. So we do our analysis on TradingView because it's flexible. We can adjust, we can create, we can draw up, we can resize, create effectively on TradingView. Then we come to MetaTrader 4 and take our trades. Just come there, execute our trade. So basically that's that, but they look exactly the same. So now let me open TradingView so that we can see it. There's a kind of resemblance, that's some kind of semblance with the MetaTrader 4 or MetaTrader 5. But basically this is where we do our analysis. Most traders, including me, this is where I do my analysis. Then if I want to execute my trade, I go to my MT4. So this is exactly how we do it. So like now I come here, do my analysis. Then after doing my analysis, I go and then take my trades on MetaTrader 4. So briefly, let me run you through the interface of the TradingView. And here we have it's very simple to use. Just click on TradingView, then sign up. Right, it's easy. Click on TradingView, sign up, and there you go. Okay, so basically if you want to sign up, what do? Just come here, type TradingView, then it will request for your login information or sign up information. Basically you can use your Gmail or whatever you sign up with to log in. When you log in, you will click on chat. This is where it will take you to. But you have to make some adjustment. The coloring will be different, but I have to make those changes to my own. When you click on settings, you're provided with the opportunity to change your chart color. So here I can change the body of my color to whatever I want, and then you see it replicated there. So you can see it's being displayed here already, as you can see. So that's that. And then, but for now, I want you to just know, because I'm gonna have a completed video where I will explain every single thing on this interface, TradingView interface, to help you understand exactly how it works and how you can make changes and use it effectively. Okay, so that is that for the platform. So your broker will offer you MetaTrader 4 or MetaTrader 5. That is exactly where you carry out your trading, and then you have the opportunity to select anyone you like. And then there's the TradingView, where you basically do your analysis and execute your trade on MetaTrader 4 or MetaTrader 5, depending on the one you choose to use. Thank you. I'll see you in the next.
Now, the demo account is non-negotiable. We'll talk about the demo account now. A demo account is a simulative environment where you can test your trading strategy. So before you deposit a single real dollar, you must start with a demo account. This is your trading simulator. It uses real live market data, but all your money is virtual, so you can do your real-time trading, but there is no real money involved. Why? Because it allows you to, 1, get comfortable with the platform without fear of loss, 2, test your trading strategies under real conditions, and then C, perfect your risk management. That is the third one. Perfect your risk management. Think of it as a flight school. You don't jump into a Boeing 747 without hours in the simulator. Dedicate several months to consistent, profitable demo trading before you ever considering a live account. All right. Understanding order types in trading. When you trade, you are placing an order. There are a few different types of these orders in Forex trading. The first one is market order. This is the simplest. You execute the trade on the go. You execute the trade immediately at the current market price. This is what market order helps you do. The second one is the pending orders. These are orders set to execute later when the price reaches a specific level. Alright, and it's divided into limit orders. Limit order we have is subdivided into buy limit and sell limit, used to trade against the current momentum. For example, price is falling, you place a buy limit below the current price, hoping the price will hit that level and reverse. Then we have the stop orders, which is also divided into buy stop and sell stop. It is used to trade with the current momentum. Example, price is rising, you place a buy stop above the current price, anticipating a breakout and continuation. The two most important orders are your risk control mechanisms. Stop loss, an order to automatically close a limit position at a specified price to limit your losses. Never open a trade without a stop loss. And then another one to critically consider is your take profit, the order at which you automatically close your trade when you are in the profit. All right, so these two things, you have to pay attention to them while trading: your stop loss and your TP. Don't ever take a trade without having a stop loss and then a TP. Next, let's talk about analysis, that is market analysis. How do you decide whether to buy or sell? You use analysis. There are two primary types of market analysis in the forex trading. One, we have the technical analysis. This deals with studying price charts, patterns, and historical data to predict future price. And then this is the what of the market, like what is going on, what is happening, what is this, what do I do this, what is the next thing. Then we have the fundamental analysis. This deals with studying economic data, news, events, and political factors to determine the true value of a currency. And then this is the why of the market. So the best traders use both, but we'll start with the visual side, that is the technical analysis. And then for us to start the technical analysis, we'll learn how to utilize candlestick, charts, and time frames, which we have briefly talked about in the introduction to the platforms. You remember? So here we'll dive deeper into explaining a bit of what they represent and how they actually work. From the previous episode, we talk about analysis, and then we talk about fundamental analysis, we talk about technical analysis, and we say we're going to start with technical analysis. And to understand technical analysis, we must first understand candlestick charts and time frames. So let's go a bit into candlestick charts and then time frames. The most popular way to view price action is through candlestick charts, because each candlestick tells a forecast story for a specific time period. So we have candlestick is divided into bullish candle and then bearish candle. The bullish candle is also known as the up candle, and then the bearish candle is also known as the down candle. So for the bullish candle, this means the price closed higher than it opened. So we have that our candle opened at this low price and then closes at this high price, right? And then the low and the high of the candle is denoted by the wicks, and then the upper bound wick, that is where it closes, is the high of the candle, and where it opens for the bullish candle is the low of the candle. Now the bearish, that is the down candle, on the other side, the price closes than it opened, right? So when the price is opens, it goes down, it begins to go down, so it closes lower than it opened. And then the high and the low of the candle still maintains the same position as that of the bullish candle. And then we say that every candle is formed within a context, that is the context of a time frame, and therefore it's very necessary for us to understand time frame. So time frame, or TF, is what each candle represents. Trading style dictates which time frame you use. So for us to do our analysis exactly, we have to know which time frame exactly are we going to be working on, doing our analysis on. And then with time frame comes the trading style. So some persons are scalpers, trade within a few minutes. Some persons do day trading, they trade, close up their trades within that day. And then some are swing traders who can trade and allow their trades to run for several days. So with time frame comes trading style, and we have scalping trading style, day trading style, and then swing trading style. And those who engage in these trading styles, we have them changed. We have them as scalpers for scalping, then day traders for day trading, and then swing traders for swing trading. And we say that scalping is trade that runs for few minutes, That is just like from 1 minute to 15 minutes or thereabout, where it runs within minutes. And the common time frame to utilize for this kind of trading is the 1 minute time frame to the 15 minutes time. Sometimes we can also use 30 minutes time, depending on the kind of trade. Then we also have day trading, and then we say that they utilize the 15 minutes time frame to 1 hour time frame. These traders ensures that all their open positions are closed before the close of the trading day. So if they open a trade, enter the trade today, they must make sure that they close out those trades. And they utilize 15 minutes time frame to like 1 hour time frame, sometimes for our one daily time frame too. Then we have swing traders. These people, this kind of traders allow their trades to run for days, like more than 1 day. It can be 2 days, 3 days, 1 week, 1 month, 1 year. Like the hedge funds, you can enter a trade at the beginning of the year and allow it to run till the end of the year. All right. So let's talk about support and resistance. Now, support and resistance are the foundation of basic technical analysis. They represent historical price zones where the balance between supply and demand has flipped. So let's look at this graph or this image here. So resistance is like a ceiling. When something touches the ceiling, it comes down. And then the support is like the floor. When you bounce a ball on the floor, it goes. When you hit it on the ceiling, it comes down. So we have historical zones like this, whereby when price get there, it turns. If it was going up, it hits that ceiling, it turns down. It turns and begin to move downward. And as soon as it hits the ground, it begins to go up again. So this up position where price, when it hits there, it begins to come down, we call it resistance. And this down or floor, we call it the floor. We call it the support, right? So we will not basically use or we will not be focusing more on support and resistance, but it's necessary for what we talk about further in this tutorial. So for you to do your analysis, we are going to be majorly using demand and supply instead of support and resistance. But for now, to make things clearer and for us to know support and resistance, let's just have a grasp of what we're talking about. Like when price hit this red line, I want to sell, and when it hits this blue line, I want to buy. And then we have another shade of this support and resistance, whereby price is not moving on a horizontal line, and we call that trend lines, right? So trend lines is drawn connecting the swing lows, that is just like the swing lows and high of the support and resistance. At this time, it is a dynamic support and resistance. So this is the support, right? The dynamic support at which we change. So when price hit this support, we go up. So because it's diagonal and slanted, we call it a dynamic support. And why? Because price is not moving at a defined zone. It's moving at a dynamic manner. Then we'll have another shade of this, that is dynamic support and resistance, that is trending downwards. And if it is trending downwards, we have a dynamic resistance. So at any point price hits this trend line, it comes down. It hits it, it comes down. We anticipate that anytime price hit that line, it comes down. So we can leverage on that to take our trades. So the support and resistance that is dynamic is what we use to form trend lines. The most basic rule of trading is the trend is your friend. It is statistically safer to trade in the direction of the established trend. So always follow the trend. That's been the common advice, and it is advisable to always follow through. And next we'll talk about indicators. Technical indicators are mathematical calculations based on price and volume. They help us confirm our analysis. not predict the future. One of them is moving averages, MA. This smooth out price action ensure the average price over a set period. Many traders use MA crossovers like the 50-day crossing, the 200-day as signal for a shift in trend. Number 2, Relative Strength Index, RSI. This is an oscillator that measures the speed and change of price movements. It ranges from 0 to 100. Reading above 70 suggests the asset is overbought, potentially due for a fall. And reading below 30 suggests it is oversold, potentially due for a rise. But here is a critical tip. Indicators are secondary. They should confirm a decision you made based on support and resistance or the model for which you trade and trend lines, not be the sole reason you enter a trade. So, we should not base our trading entirely on technical indicators. We should have a way to do our own analysis. We can then utilize the technical indicators to confirm the decisions we have made based on our trading strategy. So indicators will be like secondary, like a helpmate for our real analysis. So far we've been able to cover a lot, and I feel like this video is getting long already, and I would like to pause for this first section. I'll continue in the next section. Stay tuned, and if you have questions, you can throw them in the comment. I'll do well to look through the comment and see what I can to answer them. The ones I can answer directly, I will answer in the comment section, and the ones that I'll have to translate back to another video, I will do that. Stay sane, enjoy yourself. Peace out.